Ladies and gentlemen, good day and welcome to the Sumeet Industries Limited Q2FY26 results conference call hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Parth Acharya from Kiran Advisors Private Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Kiran Advisors, I welcome you all to the conference call of Sumeet Industries Limited. From the management team, we have Mr. Radhesham B. Jaju, Chairman, Mr. Pratik R. Jaju, Managing Director. With that, now hand over the call to Mr. Pratik R. Jaju for the opening remarks. Over to you, sir. Thank you.
Thank you very much. Good afternoon, everyone, and thank you for joining us. On behalf of Sumeet Industries Limited, I extend a warm welcome to all the participants on this earnings call. I am joined today by Mr. Radhesham Jaju, our Chairman. We appreciate your time and interest in the company. Let me start with an introduction to Sumeet Industries. We were incorporated in 1988, and over the years...
I'm sorry to interrupt, sir. Could you please, change your position because your voice is a bit muffled.
Am I audible and clear now?
A little better, though there's a little bit of muffle still around.
Hello?
No, sir, it's not clear. It's not clear as yet.
Yes, am I audible now?
Yes, sir, please go ahead.
Okay. So, let me start with an introduction to Sumeet Industries. We were incorporated in 1988, and over the years, we have grown into an established integrated polyester manufacturing base in Surat. We produce PET chips, POY, FDY, and polyester texturized yarn, which are used widely across apparel, home textiles, and various industrial applications. Now, following the NCLT evolution, our team at Eagle Group has taken over the leadership of the company. With more than 3 decades of experience in the textile industry, we are bringing that industry understanding directly into the way we guide Sumeet Industries. We now have a clear and stable direction, with a strong focus on strengthening operations, improving process discipline, and building a more competitive and consistent business for the long term. We are also driving strategic initiatives to enhance our product range. The board has approved expansion into value-added yarns, such as bright yarn and ketonic yarns, which are used in premium apparel, leisure wear, and performance fabrics. Alongside this, our 14 megawatt captive solar plant has been commissioned and is already helping us lower our energy cost. We continue to evaluate additional renewable options to reinforce our long-term energy strategy. Now, let me touch upon what we are observing in the industry. Over the past few months, the demand environment in polyester and synthetic yarn has shown signs of greater stability. According to recent industry updates, inventory levels at global retail channels are improving, and the overall demand outlook for the Indian textile sector remains positive. At the same time, input cost pressures such as raw material and energy remain key focus areas. Companies that have strong scale, efficient operations, and the ability to respond quickly to change in demand are seeing more consistent performance. This development supports our strategic focus on value-added synthetic yarns, operational efficiency, and cost competitiveness through renewable energy initiatives. Now, coming to our financial performance, for the first half year 26, the total income stood at 520.83 crore, a year-on-year growth of 2.35%. Our EBITDA level was 31.17 crores with an EBITDA margin of 5.98%, marking an improvement of 597 basis points. Profit after tax came in at 17.84 crores, which is a growth of 230.34%, and our PAT margin rose to 3.42%. Now, this improvement reflects better product mix, stronger internal processes, and disciplined cost management. Now, operationally, our team remains focused on quality, efficiency, and strengthening customer engagement. We are reinforcing our supply chain, improving workflow discipline, and ensuring smooth coordination across production and sales as demand pattern evolves. Looking ahead, our priorities are clear. We want to execute our strategic initiatives with discipline, deepen our presence in higher value product segments, and maintain strong control over cost. With a more stable structure, a standard manufacturing base, and a clear growth roadmap, we believe we are well positioned for the next phase of scale and consistency. Now, I would like to thank all our stakeholders, employees, and partners for the continued support. We appreciate your confidence in us. Now, we'll open the floor for questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Mahesh Seth from VY Capital. Please go ahead.
Hi, can you hear me?
Yes.
Okay. I had some couple of questions. So first, our EBITDA margins have improved from 1.39% to 5.98%. Like, I just wanted to know, which action helped deliver this around 460 BPS improvement in EBITDA margin?
Sir, it's been less than a year that we took over. Before that, the company was in NCLT. After taking over, we have input.
Pratik sir, once again, I'm sorry to interrupt. The clarity is, not that good.
Okay. Hello.
Yes.
Now, can you hear me?
A little better, sir, but it's a bit muffled.
Okay. Yes. Now, see, we have taken over from NCLT in the last couple of quarters. Before that, it was under NCLT. Now, after we took over the company, we made many changes, like upgradation of machineries, changing of product varieties. We added value-added products, due to which our EBITDA level has gone up. As we mentioned that our 14 megawatt solar plant is also commissioned. So our energy costs reduced drastically, while by upgradation of machinery, we were able to get more efficiency. Then, as we took over, we were able to get a better purchase as well from our raw material suppliers. So this all has helped us in EBITDA, and our major focus to increase the bottom line is by changing the product mix. We are focusing more on value-added products, which is giving us better EBITDA level.
Okay, got it. And the follow will be is it sustainable in the coming quarters? Like these levels of growth or this percentage of EBITDA margin?
See, we are trying our best to maintain, in fact, to improve our EBITDA level. We are constantly, based on the demand from the market, we are constantly changing our product mix and adding new products which Sumeet was not making before. And by adding new value-added products, we are expecting our bottom line to increase. We have achieved on energy level also, we have achieved only 30 to 40% energy reduction till now. We are focusing more on renewable energy to decrease our cost.
Okay. We come down to the bottom line. So our net profit declined from 13.87 crore to 9.86 crore, despite the strong EBITDA. So what specific cost or any one-off impacted this profitability this quarter?
This is because of this exceptional items. Our EBITDA level has been maintained, and due to depreciation, you can see that the net profit has decreased. But overall, the liquid The liquidity profit is not decreased.
Okay. And could you also tell us more about the Eagle Group? Like, what other ventures does the group operate, and can you also share?
Eagle Group has been into textile from last 3 decades, and we have variety of factories in Eagle Group. We have a complete textile chain, right from manufacturing of yarn till manufacturing of fabric, like sizing, texturizing, air tex, water jets, rapier jacquards, spinning, dope dyed yarn manufacturing. So we have been into this industry for last 30 years, and as we have all variety of textile products, so we have a good command in the market with all the customers, agents, and suppliers.
Okay. Okay, got it. And is any of those listed? Like, are we planning any merger or reverse merger?
In the Eagle Group?
Yes.
No, presently we are not planning any of that. Sumeet Industries is a standalone company, and we took over the other major shareholders, and we keen to run it as a standalone company.
Okay, got it. And or also, what's the revenue of those companies and where they operate?
Eagle Group, all companies are based in Gujarat and Silvassa.
Okay.
We have around 9 different factories in various areas of Surat and Silvassa, Dadra and Nagar Haveli. Our manufacturing head office is in Surat, Gujarat, and we are supplying material to all over India, as well as we are into exports as well.
Okay. Okay, got it. And can you also share some like product-wise revenue contribution in H1 sales?
See, we are into manufacturing of synthetic yarn. In synthetic yarn, various varieties are POY, partially oriented yarn, FDY, fully drawed yarn, ketonic bright yarn, and textured yarn.
Yeah.
So the contribution is from all the products. Yes, the major contribution is from ketonic bright yarn. That is one of the value-added yarns. And as I told you, we are all focusing more on value-added yarns. Now, in the next quarter, we'll be able to start dope dyed yarn as well. This is also one of the value-added yarns, which will help a lot in our EBITDA level.
Okay. Okay, got it. Fine. Thank you for answering. If I have any more, I'll come back into it. Thank you.
Oh, thank you very much.
Thank you. The next question comes from the line of Ashok Doot from Ashok Doot and Company. Please go ahead.
Hello.
Welcome.
I am Ashok. Welcome, sir. Sir, thank you. I am Ashok Doot calling from Maharashtra, Latura. I want just 4 or 5 questions, information about 4 or 5 questions. First is, sir, what is existing capacity utilization, plant capacity utilization? Existing?
We are using the plant at optimum capacity. We are running it at 95% level.
Okay. And when will be our expansion will be operational, sir? Because we are expanding capacity, no?
Yes, we are expanding the capacity, and we are expecting the expansion to be operation in the next 2 quarters. We can have the benefit of the expansion from the next financial year.
Okay. Another question is, sir, whether there is any effect of US tariff on realization and demand?
No, US tariff is not affecting us at all, because as I told you, our major market is Indian market only. We are manufacturers of yarn, so our business is B2B.
Okay. So any effect on realization then?
Sorry?
Any effect on realization then? Because yarn buyers are also exporting, na, by making the cloth. So any effect on realization, sales realization value?
No, not till now. And we are not expecting any effect of US tariff on our EBITDA level or on our sales.
Okay. Another question is regarding, sir, whether there is conflict of interest between Eagle Group and Sumit Industries, because same business are there in personal capacity also in here, Sumit Industries?
No, sir. First of all, textile is a very broader term. In Eagle Group,
Okay.
the textile factories we have, the products which we are making, we are not making the same product in Sumit. Sumit is a
Okay.
backward integration of Eagle Group, so there is no conflict of
Okay.
interest. The products which have been manufactured in Sumit Industries are polyester yarn and crystal-related yarn. And in Eagle Group also has a spinning industry, but we are more focused on nylon and yarns on that.
Okay.
So there is no conflict of
Last
interest.
question is, sir, what is existing electricity cost? Annual electricity expenses, what are existing?
Present electricity cost, if you are asking per unit, it is around 8.6.
No. Annual, sir, annual.
Annual electricity cost.
I want to just confirm, sir, what is the cost saving after installation of solar?
Yes. So,
For that-
yes, our electricity cost is approximately 100 crores in a year.
Okay.
Which we are expecting a saving of approximately 25 to 30% on the energy cost by going into renewable cost. And we are planning to get it to 50% in the future.
Okay. Sir, when will this 25% energy cost saving will be reflected in the result from 2026-27 or next half year from October?
As we said, our 14 megawatt means around 2 crore units per year will be generated. 2 crore units means 20, just give me a second. 10 to 1 crore unit. Yes. Around 10 to 15% will be reflected from the last quarter only.
Okay.
And further in the FY26, we will be able to achieve 25 or more than 25%.
Okay, sir. Thank you. All the best for your future, sir.
Thank you.
Okay.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Dhanraj Tolani from Kuba Advisors. Please go ahead.
Yes. Thank you, sir, for the opportunity.
Dhanraj, please be a little louder. You're not audible. Thank you.
Okay. Am I audible now?
Yes, please. Welcome.
Okay. So I just wanted to know, where are we supplying these products? What would be the specific reason?
Sorry? What is the?
Where are we supplying our products? What will be the reason?
As I told you, we are supplying major products in Surat itself, as we are a B2B company. And Surat is the textile hub of India. So we are majorly supplying it in the local Surat market. But we are also supplying it to various other regions like South as well as North.
Okay. So, we have a good product mix which help to get our good results. But what would be the ideal product mix in the future, in the next 2 years? This would be same or will change anything?
No, we will change the product mix. We are planning to get the value-added products up to 50% of our production, as well as a new expansion is planned. The new expansion is completely for value-added products.
Okay.
So our target is in FY26, we will be able to achieve 50%. Our total production, 50% will be on the value-added products.
And also, are we selling these products to the currently to the Eagle Group or planning to sell are we fetching this company?
Sorry, I didn't get your question.
Are you supplying the products to Eagle Group currently or planning to?
No, we are supplying the material to Eagle Group as well, but that is only hardly not even 5% of the total sale of us. And we are supplying to Eagle Group at the market price only.
Okay. And what is the percentage of sale is coming from Surat?
Our Surat sale, around 90% of our product is sold in Surat.
Okay. And like, how long does it usually take to make a new like the yarn product from a simple stage to make full commercial order? Like, what would be the timeline? So has it like recently improved it, or like after the management change, something like that?
So your voice is not clear. I'm not able to get the question.
So I'm saying, so how long does it take to take a new yarn product to move to a simple stage to a full commercial order? So has it
So
improved?
it is a continuous process. So daily, our yarn is manufactured and daily the material is delivered to the parties. So it doesn't have a lead time like 2 days or 4 days, 5 days. It's a continuous process. The yarn is yes, the yarn is manufactured on a continuous basis, and the dispatches to the party, the sales to the party are also happens continuously daily.
Got it. And let's say raw material prices who's currently fluctuates so much. So any raw material price, let's say, increases by 5 to 10%. So do we directly pass it on to the customer, or do we have a lag to pass it on?
No, the raw material, if the raw material prices increases or decreases, it is passed on to the customer on the new orders. So it doesn't take much time. As I told you, it's a continuous process. Daily orders are coming and daily material is manufactured, daily material is delivered, as well as the raw material are also coming in daily. It is not that we are procuring raw material once in a month. Daily raw material comes and it comes at the daily prices.
Okay. Got it. And are we facing any issues from Chinese suppliers? And then, like, do we have any pricing pressure because of them? Like, because yarn, we anyway face competition from China.
China is one of our competitors, but overall, if you, I will just tell you our market situation. The overall market, only 20% is imported from China. 80% is supplied by the local suppliers only. And there is not much price difference between Chinese products after it is landed in India. So there is not much of competition, and the market is big enough to accommodate everybody.
But my view is like, let's say Chinese players are reducing pricing drastically, specifically in commodity yarn categories. So how would you protect volumes and margins? Because we all know, like, we have to match the market. We will have to take the lower prices. So how do we plan to protect the volumes and margins?
See, if China reduces the prices of the finished yarn, our competitive yarn, even they are reducing the pricing of the raw materials. So we get the same effect in raw materials. But if we are able to get the raw material at a cheaper price, then we are able to match the prices against the Chinese products. And as I told you, the Chinese products are not even 20% of the total market share in our product. So the pricing is and still the demand is good enough, and day by day the demand is increasing. So we have enough demand to cater our supply as well as the industry supply as well as the Chinese supply. And the raw material, ultimately, the key raw material comes from China to Reliance, and the Reliance, we buy our raw material from Reliance. So they pass the price reduction as well.
Okay, so mainly we procure our raw material from like domestic only.
Yeah, Reliance is our one of key supplier for raw material.
Okay, for yarn. So which is like yarn is based on like caprolactam?
Yes, CPL, yes. No, not caprolactam, PTA and MEG.
PTA and MEG. Okay.
Yes.
Got it, sir. That's all from my side.
Yes.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question comes from the line of Aditi Roy from Patel Advisors. Please go ahead.
Hello, sir. Good afternoon.
Good afternoon.
So I just want to understand once the new lines are operational, how much capacity will be added in tons per month, and what over ramp-up period?
Sorry, you are not audible.
Am I audible now?
Yes.
So once the new lines are operational, how much capacity will be added in tons per month, and what ramp-up period?
So once our expansion is completed, we will be able to add 40 tons to 50 tons per day.
Okay, so and so are you?
So we will be able to add, we will be adding everything a capacity of 30,000 tons per annum with the expansion.
Okay, sir. And so any current customers have expressed demand for the new yarn category?
Yes. As I mentioned earlier, the expansion is for new value-added products. So there is a good market for the same. So our existing products will also will have their own customer range, and this will we will be able to add new customers with these new products.
Okay, sir. And so are you evaluating any further new yarn categories such as dope-dyed performance yarn or recycled polyester for FY27?
Yes. This expansion, we are focusing on dope-dyed yarn as well as another luster polyester FDY yarn.
And so how much improvement in margins with the new products?
We are expecting an increase of EBITDA level with this products only. We are expecting approximately 10 to around 10% more than the commodity products.
Okay, sir. And after the takeover, what are the top two strategic priorities the Eagle Group has set for Sumeet Industries for the next 12 to 18 months?
As I already mentioned that after we took over, we focused on Sumeet has two major costs, power and raw material. So we focused on these two costs, to how to reduce these two costs. And in power cost, we have already installed 114 megawatt solar plant, and we are focusing more. We are exploring more options on renewable energy to reduce our power cost by at least 40%. Now, and to decrease the overall cost of the plant, we are expanding the 40 tons per day production, which will help us reduce our fixed cost and to add a better EBITDA level. And for the next 12 to 18 months, we are focusing on renewable energy, expansion of plants, and upgradation of machineries.
Okay, sir. And so what is the average cycle time in production, and have you reduced it since takeover?
Sorry?
What is our average cycle time in production, and have we reduced this since takeover?
See, as I mentioned to our in the last question, that our is a continuous process plant. So there is no lead time. It's a constant plant. The raw material comes daily, the material is manufactured daily, and the material is sold daily. We have increased the efficiency level in the plant before takeover, as it was under NCLT. The plant was not running efficiently because of lack of raw material reaching on time, the lack of customer trust, whether the company will be able to give them material on a constant basis. But after we took over, there was the trust in the market was strengthened, and hence we got good customers who had joined us. We were able, our supplier Reliance also trusted us, and we were able to manage good raw material stocks so that our efficiency doesn't decrease due to lack of raw materials.
Okay, and sir, I have one last question. Can you please provide the revenue guidance for FY26 and 27?
Revenue, as you have seen, that our revenue has increased by 8% in the quarter, and we are expecting revenue to increase constantly in every quarter. And with when the expansion is completed, we are expecting to add 300 CR per annum revenues over and above our current revenues.
Okay, sir. Thank you, sir.
Yeah. Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question comes from the line of Priya Jain from Green Capital. Please go ahead.
Yeah, hello. So, am I audible?
Yes. Please
I
go
have
ahead.
two questions with me. Just to go quickly, like, how much waste or rejection has reduced versus last year?
Sorry, how much?
Waste or rejection has been, reduced last year versus current ongoing year.
The waste and rejection has dropped by approximately 30 to 35%
Great.
after we took over.
Good to hear. Also, okay, what is the expected power saving from the solar plant for the full year?
The solar 14 megawatt solar plant, which has already commissioned, our approximate savings from the same is around 10 CR per year, per annum. 10 to 12 CR per annum. Net savings, yes.
Okay. Any plans to export a new product?
Sorry, do you?
Any plans to export new products?
Yes, we are planning exports also from Sumeet Industries. We are focusing on the products which we can export and for which demand is there. And we will be in the next year we will start exports of some of the products.
Okay. Also, one follow-up question on solar. So, any plans to add more solar capacity?
I was not able to hear you. Please, can you repeat it?
Yeah. So, my question is, any plans to add more solar capacity?
Yes, we can.
Okay.
We are focusing on more options of solar and wind for renewable energy, which is better for our plant and our usage.
Okay. And one question related to this yarn, like, are you seeing any shifts where customers prefer synthetic yarns over cotton due to cost difference?
Ma'am, you are not audible. The voice was distorted.
So my question is, like, are you seeing any shift where customers prefer synthetic yarns over cotton due to, the cost differences?
Can you just repeat it one more time? I was not able to hear you.
Sir, I wanted to understand, like, are you seeing any shift where customers prefer synthetic yarns over cotton because there's a price difference?
Cotton industry is a separate industry than synthetic yarn. The usage of synthetic yarn in different apparels and everything is completely different, and the usage of cotton yarn is completely different. The type of products which is manufactured from cotton yarn is completely different, and synthetic is completely. There is no competition between these two.
On that only, I wanted to understand the customer preference. Do they prefer synthetic yarns more over cotton?
Some products, synthetic yarn is better, and some product cotton yarn is better. So it depends upon the type of product.
Okay. And one last question. Okay, what is the average credit period you currently offer to customers, and has this changed compared to last year?
The average credit period offered to our customer is around 7 to 10 days. And no, it hasn't changed from the last year.
Okay. Good to hear.
That is the standard market practice.
Okay. Thank you. Thanks.
Yes.
Thank you. The next question comes from the line of Prashant Shah with T Stock Mantra. Please go ahead. Prashant, please go ahead with your question and unmute yourself in case if you're on mute. Prashant, you're not audible.
Apparel, furnishing or industrial is driving the most.
Sorry to interrupt, Prashant, you're not audible.
which segment, apparel, furnishing, or industrial, is driving the most demand?
We have most demand in apparel and home textiles.
Okay, sir. I'm his colleague also speaking with you. So I have a couple of questions, right? That your receivable days have fluctuated in earlier years. So what is your target receivable cycle now?
Sir, sorry, sir, you are not audible. Can you please?
Okay, I'm repeating my question again. That
Yes.
your receivable days have been fluctuated in earlier years. So what is
Hello?
your target receivable cycle now?
Prashant, you
Hello?
are not audible. Please use the handset mode in case if you are on the speaker mode. And
Okay,
you
okay,
need to
fine.
change. Yes,
Right,
you need
okay,
to
okay.
change your position.
Is it okay now?
Yes.
Yeah. So I'm repeating my question again, that your receivable days have been fluctuated in earlier years. So
The
what is
prices have not been
your target?
You are asking the price. You just said the prices have not fluctuated.
Receivable
Hello?
days
Yes.
I'm asking. Receivable days I am asking about.
Yes, receivable days. Yes.
Yes, have been fluctuated earlier years. So what is your target receivable cycle now in upcoming future you're targeting?
So our receivable, as I told you, our receivables credit given in the industry is 7 to 10 days, which we are also following. And in future, we would like to maintain whatever the market is, the industry pattern goes on. We are not giving anything special.
Okay. And your target inventory levels, and what is your current target inventory levels, and how does it compare to FY25 in current business?
Yes. Our inventory level, we are maintaining it at a maximum of 10 to 12 days, which is as per the market norms.
Okay.
And as well as our receivables are maintained with the credit period of 7 to 10 days.
Okay. Okay. And your given historical volatility, your capacity utilization and operational efficiency, what is your internal metric or threshold triggers, which triggers a strategic shift, such as halting certain product lines or renegotiating contract or pivoting towards any higher margin segment?
As I had informed earlier that we are planning slowly and steadily increasing new products and value-added products in our line of product list. And we are targeting to capture 50% of our production in value-added products.
Okay. Okay. And as your polyester yarn manufacturer operating in the price sensitive and raw material linked industry, so how do you prevent your margin erosions when PT or make prices move faster than its ability to pass on cost increases to customers?
Very good question. I will just tell you that, in fact, the supplier of PET and MEG in India, till now, the supplier of PET and MEG was only major supplier was Reliance. In fact, GAIL and IOCL are coming up with two big plants in 2026 and 27, and Reliance is expanding its capacity by double in 2027. So, we are going to be in a major benefit.
Okay.
Because the demand, the supply will be much more than the demand of PET and MEG. So we will always be getting a better price for our raw material. So now the raw material for us, the raw material is no longer a challenge. The fluctuation in raw material is no longer a challenge.
Okay. And can you quantify your average pass-through lag and how much EBITDA compression occurs for every 1% mismatch in RM versus realization moment?
So normally, I'll tell you one thing that if the raw material reduces by 5%,
okay,
then our EBITDA level will increase by approximately 2 to 3%, because we don't have to reduce our finished prices by 5%.
Okay. Okay.
This is a general market trend that if the raw material reduces by a certain percentage, the finished product doesn't reduce by that percentage. But if the raw material increases by 5%, soon, gradually, in a month or so, the finished product prices automatically increases by 5%.
Okay.
So we are always in a better position at EBITDA level.
Okay. So, and let's say in periods where the pass-through lag widens, so do you hedge your RM exposure through inventory timing or supplier contracts or any financial derivatives? And
No,
has it
it's
the most
a
effective tool in preventing the gross spread? Yeah.
so it's a continuous process, as I told you. So we have to procure our raw material on continuous basis.
Right.
And even in sales, we always have around 15 to 20 days sales. We already sell material 15 to 20 days ahead. So we always have orders in hand, and we always have raw material in hand. So it's a continuous process. So it doesn't happen like if my raw material increases suddenly, so I make a loss in my stock or anything, because I already have sold those materials. It's always a continuous process.
Okay. Okay. So there is no need to, directly take any effective measures to.
No, there is no direct effect, because we always selling.
That kind of a situation, never. I mean, not never, but that kind of a situation, like it, less chances to occur. So that way you have to take any precautionary measures. That's what you're saying.
Yes.
Okay. 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 Okay.
In our product line, there is no certain fluctuation.
Okay. 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 Fine. And that's it from my end. I will get back into the queue. Thank you.
All right. Thank you.
Yep.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question comes from the line of Mahesh Seth from VY Capital. Please go ahead.
Yeah, hello. So I had some couple of questions. So I just wanted to know, have logistics or internal handling cost have been reduced?
Internal handling cost, if you're talking about logistics, yes, the logistics cost, due to high competition in the market, the logistics cost have come down only.
Okay.
And in our product range, whatever logistics cost we incur, we cover it from our customers. Our product pricing is separate, is on basic pricing, and the logistics cost is added to the sale price.
Okay. Okay, got it.
So that is not an expense for us.
Okay. And with the new yarn categories approved, so what is the target production volume for this line in the first full years of operation?
The new expansion, we are targeting around 40 tons per day production.
Okay, 40 tons per day.
Yes.
Okay. And what share of your current volume is driven by the apparel segment versus home textiles or any other segment?
More than 50% goes to the apparel textiles.
Okay, more than 50 is from apparel segment only.
Yes.
Okay, and okay, got it. And also, you mentioned that you have brought new machinery. So was it a replacement capex or a new capex was there?
No, the capex which we have done, we upgraded our machinery. The upgradation was replacement of our existing old machineries, supplementary machineries, which helped us in getting more efficiency and reduce our power cost.
Okay, so it was upgradation.
Yes. And now what we are doing expansion, it is addition of new machineries.
Okay, got it. Fine. Thank you for answering.
Thank you.
Thank you. The next question comes from the line of Murtaza Khan from Pinpoint X Capital. Please go ahead.
Hi, sir. Good afternoon. I hope I'm
Good
audible.
afternoon. Yes.
Yeah. So I just have a question regarding the exports. Could you please share some insights on exports, and can you also please tell what countries are under evaluations for starting our exports next financial year?
Exports from India, normally textured yarn is exported widely. So we are focusing on conversion of our POY into textured yarn and then exporting the same. And area of export for where we will be exporting is Middle East countries as well as African countries. That is our focus, because over there the yarn demand is good.
Okay. Okay. This helps. I had another question.
Yes.
Since we're already expanding our capacities, so the solar plant that we have already just put up, will it also cater to the new facility that we're expanding into? Or would we need another solar plant to reduce cost further?
We would be needing additional renewable energy to reduce our expansion, and which we are already considering it. And we'll soon take action on that as well.
Okay. And so I suppose we would be doing our CapEx from internal accruals for this?
Yes.
Okay. These were my questions. All the best. Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Parth Acharya for the closing remarks.
Yeah. Thank you, everyone. Mr. Parth, please take over.
Yeah. Thank you everyone for joining the conference call of Sumit Industries Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you. Ladies and gentlemen, on behalf of Kirin Advisors Private Limited, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.